Well, the general consensus for market analysts is that there wasn't much going to be moving in the wheat markets over the holidays. So Kim, what's been going on the past couple months?
Well, more than I expected. You look at wheat, we got about a 55-cent price increase between really right around the 1st of December through New Year's. Backed off just a little bit as we got into New Year's, often then we gained that back. So you had a relatively good rally in wheat over that time. Corn prices, they increased about a nickel. They just wallowed around, didn't do a whole lot. Soybeans, we picked up 70 cents in beans on that. Cotton prices a nickel. But for cotton, I think that's significant in that you went from 64 to 69 cents when early on in the season we thought cotton prices would stay, in the lower 60s or maybe even in the 50s a little bit. We've got phase one of China. It's not signed yet, but the announcement that they had an agreement on phase one. I think that's important over the holidays. And then we had that small dip in the prices after January 1 because some producers hold their crops, their soybeans, their corn, their wheat to sell it after January 1 for tax reasons. And we saw that sell and we saw a little dip in the prices, but they've mostly recovered.
So focusing on wheat and soybean prices, why did we see an increase there?
Well, I think the increase in wheat prices is mostly export demand. Our hard red winter wheat exports sales are about 24% above last year's level. I think part of that is because we got a shipping dock strike in the European Union and they're having trouble getting wheat out there. You've got Russian exports that are 15 to 20% below last year's level. Russia, for some reason, seems to be holding more wheat this year, keeping it off the market. I think that supported our prices. And if you look at soybeans, we probably got most of that rally because of expectations of purchases from China.
Is there anything that's catching your attention right now in the markets that could impact prices?
Well, yesterday we had the WASDE report come out, also the seedings report. Those reports were expected to be friendly to the market. We'll see how prices react on Monday. And because it's going to take the weekend for the market to go through those numbers. You look at corn. The market hasn't trusted what the USDA said about corn production. That should be leveling out. So watching that, signing of phase one over the next week or two, I think that's significant. You look at U.S. winter wheat crop condition reports, they're going to be coming out. The market's going to be watching them relatively close. And then, of course, what's going on in the Black Sea with Russia holding back on exports? Maybe we can get some more information on that.
We're starting a new year. What are your expectations, going forward?
Well, you can go back to November, December. We talked about what I expected wheat prices to be as we got into the harvest time period for the 2020. I said that I'd expected the wheat prices to be up, $4.75, $5. Right now, you can forward contract for around $4.65, $4.70. We're almost there. If that March contract can stay above $5, it's just really touring with it this last week. We can stay up that, we'll get another 20 cents on wheat prices. We've got an uptrend in wheat. I think that's going to kind of top out because our crop is made in the March, April, May, June time period. So we've got it established. I think our acres are down a little bit, but we'll see how that crop comes in. So I'm looking at slightly higher wheat prices. Soybean stocks are relatively tight. I think we could get some higher prices in bean prices. Corn, who knows what's going to happen in corn? There's just a lot of uncertainty there.
All right, thanks, Kim. Dr. Kim Anderson, Grain Marketing Specialist here at Oklahoma State University.